The white flag is out. 1 lap to go.
Days of Thunder is a movie about an up-and-coming NASCAR racer.
Cole wins his first ever NASCAR victory.
Millions of people attend motorsports events each year. This stock spotlight profiles one of the key players in the space. International Speedway, ticker ISCA, is the largest owner and operator of NASCAR racetracks in the United States. The company was founded by Bill France, who also founded NASCAR. The primary asset consists of 13 racetracks spread around the country, including the Daytona International Speedway, home of the Daytona 500. Here's Bill France Jr. in his own words describing the history of the company.
You could see the days were going to be numbered here at the beach and needed another permanent facility. He went to work with the community leaders at the time, and they worked and went down one avenue after another and hit dead ends, and he just kept on being persistent.
I always had the feeling that we had the best racing in auto racing.
His view was, well, if we're going to build something, why build one that's the same as the Indianapolis Motor Speedway? Let's build something that's faster.
And ultimately, he wound up leasing the land and building the track himself. Well, it was a success. It was a surprise in a lot of ways.
The race is on. Did your father have any business philosophies that he passed on to you?
Well, one of the key ones, if you tell somebody you're going to do something, you do it.
If you're a stock investor, there's a field of thousands of stocks you can buy on a given day. How do you choose which one? Here's a short primer on our investment process. Clients we work with generally want 3 things from their investments: safety, growth, and consistency. To help clients achieve the results they're looking for, we focus on 2 principles: quality and value. When you shop online, you know that a product that scores 5 stars probably is going to be better for you than something that scores 1 star. We think similarly when it comes to investing, and we've devised a proprietary process that we use daily to rank stocks on quality and value criteria. ISCA's profitability peaked around 10 years ago. NASCAR's fan base was hit hard by the recession, and attendance figures have been lackluster ever since. Retirements of key stars has also strained the brand. For instance, fan favorite Jeff Gordon retired in 2015, and Dale Earnhardt Jr. is retiring this year. Another headwind to cash flow has been high capex costs tied to this project. Between 2013 and 16, the company spent approximately $400 million revitalizing Daytona International. They modernized everything from seating to entrances, restrooms, merchandise stands, you name it. The finished product looks great, but what investors want to know is, do these enhancements add value to the operating returns of the business? A recent investment of $178 million into the Phoenix facility produced incremental EBITDA of just $9 million. That's a low return on invested capital. Most investors would probably like to see higher dividends and stock buybacks, which management has committed to going forward. In some ways, ISCA resembles a public utility. Utilities are low-return, high-capex businesses, and the most attractive feature is generally their stability. They operate like regional monopolies. NASCAR's racetracks function like regional monopolies as well. High fixed costs to build new stadiums, plus the France family's control over where the races take place, deters competition. The races themselves also have distinct identities and brand value. Forbes rated the Daytona 500 as the 7th most valuable event franchise on the planet, ahead of the NCAA's Final Four tournament and the Kentucky Derby. Approximately 67% of ISCA's revenue is recurring in nature and expected to grow at about a 4% annual rate between now and 2024. While while it's admittedly a non-standard comp to use, if you compare International Speedway to a big public utility like, let's say, Duke Energy, you'd find that ISC has a higher return on assets profile, higher shareholder yield, and it trades at a cheaper enterprise value to EBITDA multiple. A few macroeconomic indicators also suggest the shares may be undervalued. Remember, this is a late cycle play where their consumer base is mostly middle income consumers. So when you get in late in the job cycle, that's when wage gains kick in. That's when ISCA's customers are going to be in the best shape to go to races, spend on merchandise, etc. The Economist cover recently declared a bull market in everything. Well, that's not entirely true. Specifically, there hasn't been much of a bull market in value stocks in recent years compared to growth stocks. Cheap stocks like ISCA have lagged in recent years and become progressively cheaper compared to the broad market. International Speedway trades at only a modest premium to its recent average valuation, whereas if you look at the S&P 500, it's pretty pricey compared to its average. Finally, one other thing I like about this stock is the technical setup. What you see here is what's called a wedge formation. The bulls and bears battled it out late in the summer as the stock's range compressed, and it looks like the bulls had a decisive victory with the stock breaking out through upside resistance.